It is a cold day here in Calgary. So, will interest rates go down in 2024? It's the question that's on everyone's mind. We're all feeling pinched with rising prices, and if you're one of the lucky ones that locked in before rates went up, then maybe you're not feeling the pain as much yet, but your renewal date is likely approaching, and the amount that your monthly payments could go up by could be a lot. Or maybe you're variable and you're riding this roller coaster that just keeps going up and you're waiting for the sweet relief of an interest rate drop. That's the boat I'm in. We renewed our mortgage in November of 2022, and we were below 3% before, and now we're variable at 6%, and it sucks. But I'm not gonna lock in now. Hi, I'm Dawn Heron-Mazer, realtor with Real Broker here in Calgary, Alberta, and if you have any questions about buying or selling, you can book a call with me in the description below. Let's start with the basics. Why did interest rates go up anyways? Interest rates are often raised in response to high inflation as a way to control the economy's overall level of spending. Imagine inflation like a balloon that just keeps growing as prices rise, and the Bank of Canada is like someone slowly letting the air out so it doesn't pop. When everyone's out splurging, prices soar. To cool this, the Bank of Canada hikes up interest rates, making borrowing more expensive and saving more attractive. It could also happen because there's a lot of money out there, but not enough stuff to buy with it. So thinking back to COVID, when many people had more money than they'd had in a while because they didn't have anywhere to go and they didn't have anything to spend it on. Of course, it wasn't the case for everybody because a lot of people were out of work, so count yourself lucky if you had the first problem. So what's the Bank of Canada saying? On December 15th, Governor of the Bank of Canada, Tiff Macklem, said, "We've come a long way towards restoring price stability. This was our second year of monetary policy tightening, and that work is paying off. The economy is no longer overheated, and that is relieving inflationary pressures. Inflation has come down from just over 8% in the middle of last year to 3.1% in October. Inflation has come down, but it's still too high." Looking ahead, the Bank of Canada expects 2024 to be the year of transition. The effects of past interest rate increases will continue to work through the economy, restraining spending and limiting growth and employment. Unfortunately, this is what's needed to take the remaining steam out of inflation. But this period of weakness will pave the way to a more balanced economy. Sounds lovely, doesn't it? They expect growth and jobs to be picking up later this year, and inflation will be getting close to the 2% target. While the worst of the pandemic is past, we have learned a lot. But the challenges of the future could be different and pose more uncertainties. Geopolitical tensions, extreme climate events, high levels of debt, supply disruptions, and shifts in economic relationships could become more common. This year, after every policy announcement, there will be a discussion because the Bank of Canada seems to be very focused on transparency and ensuring Canadians understand their decisions. The Bank of Canada is working on a new forecast, and they'll be releasing that with their new economic projections in late January. So keep a close eye out for that. I'll be discussing it when it comes out too, and we can discuss together. This financial squeeze is real for everyone. Think about it. Higher rates mean less spending. You've seen prices dropping for stuff like appliances and clothes, right? But what's not normal is inflation for food, non-durable goods, and shelter costs. So food price inflation has eased, but it's still about 5.5%. Housing and food make up half of the CPI basket. Unless these areas slow, it's gonna be hard to get inflation down. And speaking of housing, let's chat about Calgary. So here, unlike Toronto and Vancouver, we can expand outwards, but land is becoming more expensive. The profit margins for builders are less, and finding skilled tradespeople can be a challenge. So there is a structural undersupply of housing, and we're not building our way out of it quickly. Rising rates have sidelined many home buyers, but we've seen very high migration numbers from other provinces, and we're expecting more people to move here. Demand is greater than supply, and Calgary home prices seem unaffected by rising interest rates. But with over 60% of mortgages coming for renewal in the next 3 years, the Bank of Canada is paying close attention to the payment shock to many households. This should be interesting to see if and how it affects our market here in Calgary. So, the million-dollar question, when will rates drop? Macklem says once Governing Council is assured that they're clearly on a path back to price stability, they will be considering whether and when they can lower their policy interest rate. They said they know it's tempting to rush ahead to that discussion, but it's still too early to consider lowering it. So, I guess that's expected. Not quite yet. Whenever someone claims to know exactly what the economy is going to do, I'll tell you, I doubt their assertions. The economy is full of uncertainties. So based on the information we received from the Bank of Canada, I'll tell you my prediction. I think interest rates will start to come down in Q3 this year. What do you guys think? Am I wrong? I would love to be wrong and it's actually Q2. Check out the scheduled dates for the interest rate announcements for 2024 in the description below. Thanks for watching, and I'll see you next week.